Hi, good morning. This is Ian from Hola Prime and this is your weekly market update video. It is Friday the 18th of July 2025, 9:15 in the morning in the UK. Today I want to look at DXY, which is the dollar index. I want to explain DeMark indicators. This is DeMark sequential. I want to then highlight what I believe is going on in the dollar index. We're going to overlay that onto the euro against the US dollar on a short-term basis. So this is an intraday setup, and then we'll look at sterling against the US dollar on a more medium-term swing setup. I'm long of gold this morning, so I'm going to explain what I saw there and how I executed that trade. Euro against sterling was a trade that was previously taken this week. I'm going to look at single currency baskets, again something that's probably pretty new to most traders, and how we can use that as an overlay to get into trade plans. Obviously, when we're trading currencies, and I predominantly trade currencies, we're looking for one weak currency against one strong currency, and sometimes it can just be the single currency that's actually driving the move in, say, sterling yen or euro sterling or sterling Swiss, predominantly being sterling and not the counterparts. So it's quite important that we know which single currency is really driving the move, and we're going to explain that today. So let's get to the charts. I'm going to highlight this first chart. So these are trading view charts. This indicator that we have on at the moment is called DeMark. So I believe that markets move in sequences, in waves. I look at Elliott Wave formation, I look at cipher pattern analysis, but I also believe that where a lot of traders miss out is on a time element, and DeMark basically gives me that overlay. Now, a lot of the great studies, as far as I'm concerned, have an element of timing within them. When you look at the Gann theory, that is really based around time. DeMark indicators, they have a counting sequence. Okay, so we get 9 counts and we get 13 counts. Now, a 9 count will normally highlight that we'll see a correction in the opposite direction. Notice I said correction, not exhaustion. Okay, the 13 count highlights an exhaustion, and that could be the end of a trend. So I look at DeMark indicators, but in higher time frames, because predominantly I'm a swing trader and it will give me a bias for longer term setups, but also it can sometimes get you into shorter term trades, and that's what's happened this morning in gold. So enough sort of waffling on about how it's formulated. We can see this is DXY, it's a daily chart. We can see that we've had a positive 9 count to the upside. Now, you'll have to look, there's a great book out there by Bloomberg, or Bloomberg actually published it, about DeMark indicators that I recommend you take a look at. If not, you can Google how the number sequence is formulated. It's basically about the close of each candle, and the close of each candle has to be higher than the close of the candle 4 candles before. Now, that might sound a bit like Stacey Burke, but Stacey Burke has sort of 3 candle formations, but looks at daily charts. Okay, so here we can see the first candle, the 1 candle, and that's known as a DeMark flip. So instead of having this sort of sequence of red candles and negative days, even though we've started to move to the upside, we haven't closed higher than the closed 4 candles before. But when this occurs, we get a DeMark flip, and that is an immediate change in sentiment. But why don't we trade the 1 count? So we've seen this bearish count, we've had a 9 count complete, we've then got a 1 count. You could, but that's highly risky, because what can happen is we can just move to maybe a 5 count and then the count breaks and you're in a trend and you don't really know where your stop loss is, etc, etc, etc. And in fact that was just a very mild correction, and you might have got a 9 count on maybe the 4-hour chart. So what we're looking for is completion 9s, and that then gives us a bias for a move in the opposite direction. So obviously a 9 count after a bullish run in DXY, which is the US dollar, should indicate that we then see a correction to the downside in the dollar. If we see a correction to the downside in the dollar, correlation studies say that we should see a move higher in sterling, dollar, euro, dollar and gold, which is the one that sort of I've managed to catch this morning. So let's go back to the charts. So what are we seeing in, and it's very important that we try and formulate whether or not we believe this move, the current move, whether or not it's corrective or it is an exhaustion. We've had a completed pattern and then we expect to move to the downside. Now when I go to this chart here, okay, this is the 4-hour chart, we can see pretty choppy price action to the downside, okay, and then we've seen this correction higher. Now using cipher pattern fib retracement levels, which are all here, and I will just show those on the screen just in case anybody wants to freeze that and take a screenshot. These are cipher pattern retracement levels. So there's a couple in there that are obviously the same as normal fib levels, which is 61.8, 78.6. 88.6 is very important when we're looking at cipher pattern analysis, but all of these ones are slightly different and they make up different patterns, okay? So I'm actually just going to turn this to 360 and I'm going to use a fib extension tool on here, okay, and then I'm going to pull it back, and this would then say that the current move lower in the dollar is corrective, but we can still play it, okay? So cipher pattern analysis would highlight that we get a crab formation all the way up here at 105.03, but remember this is a 6-hour chart, so ample room on a daily basis to move to the downside. So according to cipher pattern analysis, according to DeMark indicators, DeMark's given us a 9 correction, we're dragging back, okay, we're correcting lower, there's profit taking going on in this last dollar rally, and that can be analysed as this BC leg of this large bat formation. Now the BC leg, it's quite a difficult leg to trade because it can retrace 88.6% of this last rally, which gives you a decent retracement level, or it can retrace 38.2% of the last rally, or theoretically it can go anywhere in between, okay, but those are the common retracement levels. So what most cipher pattern traders or cipher pattern analysts that use this formula will try and trade either the CD leg to the upside, which will bring us on to sterling dollar, or they'll trade this leg here, the completion of the pattern. What is quite difficult to do, but what we've managed to do this morning is to actually catch the BC leg and trade this to the downside. Until all of this sort of completed, it can be difficult to get into intraday trades, is what I'm trying to say. So at the moment, the bias for the dollar is to the downside. Now on the right hand side, you'll see that I've got my FX list. It's not just foreign exchanges. about 40 different products. But if we click here, we've got, if I open up the list, we've got loads of different single lists, if you like, inside that formula. And here I've got the dollars. Okay, so if we then go back to the right hand side, you've got euro dollar, sterling dollar, etc., etc. So dollar denominated products. And I want to talk about the euro against the US dollar. And this was a report that I sent out this morning to Hola Prime with regards to where I believe the euro against the US dollar was going, and it was actually trading down around here, around this point of control. So using the correlation from DXY, which is the dollar index, expecting the dollar to move lower, so expecting to at least see a counter trend trade to the upside in the euro against the US dollar. And when I clicked on this morning and used the fib extension tools, I could clearly see that we'd stalled around the 161.8% extension, which is at 116.31. That to me immediately flags up that we could be in a or an Elliott Wave pattern. So wave 1, wave 2, wave 3, wave 4, and then up in 5. Here we've got bearish order blocks. So just to highlight what we're seeing on these short-term charts, we've got smart money concept, which is the order blocks, mitigation blocks, etc. We've also got volume profile. I like volume profile for intraday setups, basically trying to get in round about the point of control. So dollar moving lower, euro dollar moving to the upside. 116.72 is the order block, 116.77 is the 261.8% extension level, and a common exhaustion zone. I noted this morning, basically 116.03 is a break of structure. So again, you can formulate your trade plan. Let me just have a drink of water. So if we believe it's moving a lot higher within the fourth wave, and of course I think this is probably one of the best tools that TradingView have, is obviously taking your entry level. You have a defined stop, so a defined stop is a break of structure which is below 116.03, and then a defined target. Anything over sort of 2 to 1 is worth the risk. Anything below sort of 2 to 1, as far as I'm concerned, isn't. So this was sort of the intraday setup this morning, seeing dollar move to the downside, seeing euro dollar moving to the upside, trading the fifth wave. We know a break of structure, we can formulate a trade plan. Let's go to this one. So this one was also sent out this morning. We're actually trading inside of the pattern. So what happens in a lot of sequences, we get repetition. Okay, so flag formations, wedges, head and shoulders patterns, I quite like those because they give you a measured move. Okay, so a measured move is a technical analysis tool that lets you highlight where you think the asset is going to end up. So flag formation, what we do, we take the length of the flag, so from the flag pole I should say, so from the low to the swing high, we can then project that excuse me, from the swing low, and it gives us our target levels. So AB equals CD is at 3,366. We've got a bearish order block located at 3,366. Excuse me. So that gives us a target level. So immediately, again, we want to plan the trade, and we want to trade the plan. Like I said, we were inside the channel formation, and I actually got my trigger this morning. So stop loss placed below. I know where my target is. I know where my entry level is. I know where my stop loss is, so I can then formulate the plan. So dollar moving lower, gold moving to the upside. And just to talk about correlation a little bit, I looked at US 30 this morning, I looked at the DAX, and I thought there was scope for quite a decent correction lower from sort of DeMark exhaustion counts, correction counts, and just using that as a mental overlay, wasn't really a technical overlay, but a mental overlay, gave me a little bit more confidence to pull the trigger on gold this morning. And also I use, when we're talking about counts, okay, a lot of the time when I get into signals, especially when they're on an intraday basis, I will have target levels, but I'll also have a time expiry. So from this trade this morning, I want to be at least be locking in profit at 11 AM UK, which is 10 GMT, because that is when the signal candle actually expires. Okay, so just another way of using DeMark indicators. So we spoke about the dollar, we spoke about gold, we spoke about the euro against the US dollar. Let's have a look at cable. That's one thing we haven't looked at yet. Okay, so again we're correcting higher, but this is a big picture analysis. Okay, this is the swing trade opportunity. So again, using a different time frame. Is this coincidence, or is this, you know, a really good technical analysis tool? I'm just looking at this middle chart here, which is an 8-hour chart. So, you know, a bank of liquidity down here that's been untouched, and we move lower, get into that area, and then we start to correct higher. Technical analysis still fascinates me even after all these years. So what do we have? So on an intraday bias, we've got the dollar pulling lower. That's given the opportunity for gold to move higher and for euro against the US dollar to move higher. But it's corrective, as long as we know that it's corrective. Okay, so we've got an intraday trading opportunity in gold and euro dollar. We've got a swing trade opportunity when those trade plans expire. In other words, when they hit target or they don't, or they hit stop loss, then it opens up scope for a swing trade. So a different time frame, a different trade plan. 1, 2, 3, 4, 5. So we've got a 161.8% extension tool here. We've got the 261.8% at 1.3189. That is a common exhaustion level for an Elliott Wave pattern. Okay, market structure break, MSB. Why is it important? It's an overlay. Okay, it was the chart was making high highs and high lows. This structure was broken. Because the structure is broken, it then becomes, what was support becomes resistance. That's quite important when we're looking at technical analysis. A lot of the time, when we get breaks of structure, market structure breaks, we will get a retest of those structural breaks. Okay, so I've got resistance located at 1.3517. I've got a market structure break located at 1.3520, and I've now got, if I can just break it down, sorry, let's go to 60. We can now get a decent channel formation. Okay, so we take the swing high, we take the swing low, the next swing low, and project it forward. We then use the swing high as the swing high, and that then gives us an upside barrier. So you can see we're getting an area of confluence. Okay, so 135.04 is a channel top, 135.17 is a bespoke resistance, and then we've got that market structure break. We can see here that you know, on volume profile, the majority of today's volume has happened at lower levels, which should mean that dips get bought into and we correct higher within that fourth wave. So that's sort of an explanation of how I use DeMark indicators, how I use it on an intraday basis and a medium-term swing basis. I know it sounds complicated. Like everything else, trading is complicated, but the more you get used to sort of 9 counts, 13 counts in these higher time frames, then you can start trading a plan around it. So, okay, gold, euro, dollar, cable. We'll talk briefly about euro sterling because it's the good, the bad and the ugly, and we had a trade opportunity, if I can find it, I can't remember which time frame it was on, here. So again, using sort of DeMark indicators, using a flip. So I spoke to Sammy earlier in the week, and we were talking about some different trading techniques, and I was talking about correction counts, exhaustion counts on DeMark indicators, but I was also talking about a little overlay for intraday trade setups. One candle formation that I really like is an outside bar. Now, an outside bar is different from an engulfing candle. An outside bar completely takes over the previous candle's range. Okay, so an engulfing candle is just the open and the close that take over, that engulf the open and the close of the previous candle. When we get an outside bar, it's the whole range. And what that says to me is there is a real strong change in sentiment. So the market has continued to move higher. It's made a new high, but then it's aggressively moved lower and made a new low below the low of the previous candle. Okay, so not to be mistaken for engulfing. A bearish outside candle is stronger, and when we see that with a TD flip, so we talked about the DeMark flip in sentiment, it gives it more power. Okay, so it's an overlay, and that overlay can be quite strong. Plus the fact when we talk about planning the trade, trading the plan, it gives us an entry because that's the close of that one candle. It gives us a stop loss because that's the high in this case of that one candle, and it gives us a target which is the 9 candle. So we're getting a flip, we're entering the trade, we're running it down to the 9, or we're stopping ourselves out on the swing high. Now, unless that one candle is particularly strong, then we should get decent risk reward. When you think about the 1 candle's the stop, the 9 candle's the target, you know, risk reward will normally come in around about 3 to 1. And again, you know, that's what we're looking for. So here we had a sell set up. As soon as I see a trigger candle, I want to be calculating what I'm seeing on the chart. So I see a trigger candle. Is this counter trend? Am I 5th wave? Am I 3rd wave? Am I completed cipher pattern? Am I trading in the CD leg of the cipher pattern? Where's my target? Going back to gold, AB equals CD. I've got an entry, I've got a target, I've got a stop. Okay, so you've got to plan it out. So here, I knew or believed this was going to be counter trend because I'm in an expanding wedge pattern, and that basically says to me you can't leave any of this on. So a lot of the time I will be able to get into intraday trade setups, but those intraday trade setups, when I look at big picture analysis, so I go out to maybe a daily chart or a weekly chart or 8 hours, it will say, hold on a second, you could be in the third wave of quite an aggressive Elliott Wave formation here. You want to leave some of that trade on, and when I say leave some on, it's a small amount, predominantly a quarter of the trade will be left to try and bleed the move to the downside. So like I said, got in here, I've just put a line, there's a blue line across the chart where we got out, which was at 86.47. Oil, let's have a quick look at oil. I don't know why I haven't highlighted that on the chart. Okay, so again, which chart am I? So when we break structure, so when we go from higher highs to higher lows, or we go from lower lows to lower highs, then that can also be a change in sentiment. What we want to see when we get that aggressive change in sentiment is aggressive candles. So we want impulsive candles. We want those engulfing outside bars, okay, to push us higher, and then we can start planning a trade around there. So as I said previously, cipher pattern analysis, Elliott Wave will sometimes overlay on top of each other. It's important that you have the correct settings. For me, it's important that you plan them out yourself. Now, there are automated cipher patterns or symmetrical pattern indicators on TradingView. You can use them, maybe use them as confirmation, but again, there's a great book out there. If you want to study the art of cipher pattern analysis, it's called Trade What You See, by two American authors, which I can't remember at the moment. But these patterns work, okay. With an overlay of Elliott Wave, you're sort of looking at the potential for some of these patterns to be inside of wave 2 in a bigger picture. They're the inside patterns, which are the Gartley and the bat formation. The outside patterns are the butterfly and the crab, and often they're the exhaustion zones in bigger moves. So here I can see a bat formation. So we've moved low to the downside. We've then started to produce higher highs and higher lows. Okay, so this is a higher low. This, as soon as it breaks this formation here, becomes a higher high. A 161.8% extension level at $66.72. We've seen a period of consolidation. We had the point of control this morning at $66.35, which I believe was sort of a prime long entry. We've got a market structure break here at $65.90. Why is that important? Because we can then plan a trade around it. Okay, so Elliott Wave 1, 2, 3, 4, 5. What happens if that happens? Well, we don't have an Elliott Wave formation anymore. Okay, that becomes negated, as I like to put it. So again, we can look at our point of control, and I don't think we're going to get there now because we have moved higher. But you know, you have to stick to your trade plan. So the point of control, which was $66.35, we then have our target level, which is the completion of the bat formation. We then have our stop loss, which is underneath this MSB, market structure break. It then gives us a risk reward factor of 3.4. Now we are running out of time, so I'll just say that it's probably too late to look at the single currency baskets. But what I have seen at the moment, I've seen a move higher in the New Zealand dollar. I've seen a move lower in the Japanese yen. I believe there's potential for that trend to continue to the upside, and that's using correlation studies. So obviously looking for one single currency that looks like it's going to be stronger than its counterpart. Okay, I hope that's been sort of educational. I'll keep you updated with the daily reports, and also be back next week to highlight any trading opportunities that I'm seeing at that time. Good luck, and I'll be back again soon. Many thanks.
Hola Prime, trade with transparency.